With the latest CPI print coming out on Wednesday, for the bull market to continue to set new all-time highs, we need a good reading. However, this real-time inflation index is warning we could see a major spike, which could cause a nasty sell-off in the markets. Now, unlike with the monthly jobs report, a weak jobs or a strong jobs report can still be good for the markets. However, with inflation, there is no scenario where high inflation is good. And the worst part is that it means the Fed cannot pivot. So continuing with high rates and QT, and this is certainly not good for the crypto market. And so in this video, we'll quickly dig into what this warning is and why it could cause a nasty correction. How bad do we think that it's going to be? And then what I'm personally doing myself, why I'm taking some profits on my most recent buy. Okay, so first up with the latest CPI about to drop, let's dig in and take a look at this warning. So jumping in straight to Trueflation, which is the real-time inflation index. And this is something that I first warned about probably 3 weeks ago. And that was the fact that we'd had some great months where from the start of the year, inflation had been coming down, a little bit back up, and then a nice drop, bit back up, but the trend has been down, 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 all looking very good. Really close to the Fed's target of 2%. However, the bad news is that this next CPI release coming on Wednesday is for May. And if we take a look at May, we can see that inflation is certainly spiking back up, taking us back another couple of months. So April, March, we've not seen this high since March. Now, I don't really pay attention to the actual reading because Trueflation and CPI is always different. Trueflation is always lower. But I'll take a look at the overall trend. So if Trueflation is saying it's going down, generally it is correct. So generally it's probably going to be correct that it's coming back up. But the actual reading, I don't pay too much attention to. However, it's quite a big jump. So this is below 1.4 and then it's spiking all the way past 2. So that's a potential 0.6% increase, which would be a big shock to the market. Like I say, there's no scenario where inflation is good. And as mentioned with a job report, if we get a strong job report, it means the economy is doing well, so that can be quite good. If we get a weak jobs report, it means the economy is struggling and it means the Fed can come in and lower rates and stop doing QT to help. However, with inflation, there's no scenario where high inflation is good. High inflation ties the hand of the Fed and it means they cannot pivot. And obviously high inflation is bad for every single person watching this video. It's just higher prices on everything you buy. So this certainly is a concern. It's worth digging into. So let's take a closer look. Now, other than the CPI, the Fed also looks at the PCE. So this is just pointing out again that from February, which was really Trump's first month, inflation has been coming down 2.6, 2.3, 2.1. So the next one, all things being well, would have been below 2%. Then CPI, here is CPI, which is the one that's actually hitting tomorrow, and it spiked over 9% in 2022. However, since the start of the year, and then really Trump's very first month, it was at 3%. And so far, it's been good. It's gone from 3% to 2.8 to 2.4, last one being 2.3. So this was well on the way to 2%. And if it does spike back a couple of months, then this takes it back to 2.8. And as mentioned, there's no scenario where inflation back at 2.8% is a good thing. So the question is, how bad is this going to be? And would it actually cause a nasty sell-off? Well, there is one saving grace. So if inflation was to spike back to 2.8, how bad would this be, and what is this one saving grace? Well, it has to do with analysts' expectations. There's always a forecast and market expectations. And the reason this could save the day is that it's already predicting that inflation is going to be rising back up. So the last print was 2.3, and then its market expectations, if it is 2.5, then it's already taking some of that load. So even a worst case scenario, if it spikes back up to 2.8, the jump from what people were expecting at 2.5, whether it's 2.6, 7 or 8, is not as bad from the actual reading, which was 2.3. So that's the only saving grace which could negate some of the pain. However, Trueflation is saying it's going to be knocked back a couple of months. Will it be as bad as 2.8? We'll soon see. And it also shows us how useful this Trueflation real-time index, how useful it actually is. Now, when it comes to myself, it's just a personal choice, but I will be taking some profits. In fact, I've already done so. Now, this obviously isn't a recommendation for everybody because everybody's situation is different. Traders may want to trade this, long-term holders may just want to hold. But for my personal situation, when we had the nasty tariff crash which happened here, taking us down and bottoming in April, I actually made a purchase. And being all in crypto, I actually took out a loan, so got into debt to buy around here. And as mentioned, it wasn't actually Bitcoin, it was ENS. So luckily for me, this was the destruction that happened. Obviously Ethereum's had it bad, so ENS was even worse, but I knew this was a bad time right here. By the time I secured the loan, I think I got it on this day here at about 12.5. So from 12.8, it's still been a good 50-60% increase. So this is my personal situation. Being all in on altcoins is one thing, but being all in altcoins and going into debt just tipped my personal risk tolerance to the other side. So I've just taken these profits and nicely fattened up the bank account. So if we do get a nasty sell-off, I still think it probably recovers and we're on to the next thing. However, even if you just take 1% profit on your portfolio to give yourself a bit of cash, that wouldn't necessarily be a bad thing. So there you are, guys. Let's prepare for this latest CPI print and let's wrap up this video with a quick summary. With the most important CPI release of the year about to drop, remember, there is no scenario where high inflation is good. Trueflation, the real-time inflation index, predicts that it's going to be spiking higher. Now, the saving grace is that expectation is also saying it's going to be raising by 0.2%. So this definitely could negate the impact. And I just have a feeling even if inflation spikes higher and causes a nasty sell-off, it will probably be over in a few days. The markets float back up and we're on to the next thing. Whether it's a major trade deal or with the big Trump beautiful bill that's coming out very soon as well. So there are, guys. Hope you enjoyed. Now we'll all soon see what's going to happen with this latest CPI print. Just more volatility in this overall crypto bull market. Now, as always, if you do have any burning questions, then simply use super thanks below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new super thanks commenting system. So to get your question or comment read and replied to, or just to say thanks, then use super thanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.